Well, hello and welcome to episode 50 of the Lending Podcast. We are your hosts. I'm John Burnham along with Jeff Jones.
Hello.
We are excited to be with you again today, and we've got a good topic for you. We get a lot of questions on this, so we're hoping that this information helps and brings some value to you.
Yeah, and I'm excited it's 50.
That's
So
right.
when we started this in February of 2024, now we're sitting near the end of December when we're recording this one.
Yeah, 10 months.
It's been a whirlwind.
It has been.
So 50 episodes. We have a wealth of knowledge. So if you haven't gone through, our episode list, we'd love for you to just check it out. We think it's great information to help people out there make good decisions for their home buying process.
That's right.
And, our vision was really to kind of help people get their dreams met. And here we are at 50. And I think we're going to keep going till 500, maybe even 5,000.
That sounds fun.
And so if you've been with this journey with us, thank you for hanging in. If you're brand new to us, please like, subscribe, share. We do hope this gets out to a bigger audience than we have. And also, too, we're going to hit this year off, 2025. We do have some plans to expand our content. So we're going to be doing interviews. We're going to be doing home showcases. We got a lot of good stuff coming down the pike. So stay tuned for some changes and kind of a bigger panel than just you and me every time.
Absolutely.
So I'm excited. I think it's been, the Lending Podcast is going to be growing.
It's a lot of fun.
Got
I
new
enjoy
gear.
it. Yep.
We actually have stuff on the wall behind us for once.
We do. We got our wall decorated now. This is only just a little snippet of the wall, but yes.
Yeah.
Well, it summarizes our core values. Let's talk about our core value. We weren't going to talk about this, but I want to highlight this real quick. So on the wall, we have our core values are success, dynamic, positive attitude, excellence, and relationships. You can see the relationship sign behind us here. And those 5 core values were implemented by our founder, Stuart Hunter, back in 1999. We're now 25 years old, so we're 25 going into 2025, which is pretty cool. And so
prime of life, really.
Yeah.
It's the prime of life. It's when dreams come alive.
That's right. Well, 25 years for a company that's grown to be nationwide. It is has a massive reach. We've changed a lot of people's lives.
We're in 48 states in the U.S. now.
Yeah.
So it's pretty good.
It is. Okay, so let's talk about the topic.
Okay. So it's Christmas season. So
Christmas
is next week for us. I don't know when we're going to post this one, but hopefully soon. And we want to talk about gifts.
Gifts.
Isn't that the reason for the season?
Gift giving, but specifically gifts to help buy a house.
That's even better.
That's what we.
Definitely the gift that keeps on giving.
Yeah. So the question we get a lot is, are gift funds allowed? Right. So my parents want to help me, or my siblings want to help me, or I want to help my parents, whatever it is. And so you have a family member. Most of the time, it's a family member who wants to help you buy a house by giving you a gift. And when should that gift happen throughout the process? What kind of documentation do we need? What loan types are eligible to receive a gift? Can we use those funds? Are those eligible? So those are the topics we're going to talk about. And
yeah. And for those of you that are out there that don't have a lending background, like a lot of people, obviously we're specialists in our industry. So when it comes to different types of loan programs, we use that phrase to talk about, the difference of a conventional loan that a lot of people know about. It's like the vanilla, first-time home buyer loan. Once you get to 80%, it doesn't have mortgage insurance, 80% ownership of your property, of equity, the loan to value. And it's a great product. It's one of our favorite programs out there as a conventional loan. Those are guidelined. So the requirements to meet the conventional loan guideline is made by Fannie Mae and Freddie Mac. We have both different guidelines. So, and then we have FHA, and we have VA and USDA. Those 3 are government loans. Those have different guidelines. And then we have a whole slew outside of that window that we call non-conventional or non-qualified mortgage that has their own guidelines. So we usually talk mainly about, when you're talking to a lender, they're usually talking about, conventional or government loans. And so just to unpack, when we say programs or product, we're talking about which bucket has a different guideline.
That's right. Yeah, there's so many different loan programs, as we've discussed on this over the first 49 episodes of how many different loan programs are out there. And I think when you think about gift funds, what we see as a lender a lot of times is we'll have a client say, I've got 20% to put down, or I've got 10% to put down. They sort of come to us with a plan. However, we haven't seen bank statements yet. We haven't really seen where the money's come from. Then we get the bank statement and we realize, oh, there was a $50,000 deposit because mom and dad are giving the gift of equity. So yes, you do have 20% to put down, but the gift funds are coming from a family member. That's okay, and it's acceptable. However, it can be taxing sometimes on our clients when they've already received the money, it's in their bank account. Now we get the bank statement, we see the large deposit, and now we've got to verify where those funds came from. And so unpacking that, I think that the takeaway, if I want clients and agents and referral partners out there as you're listening to this, the takeaway is have the conversation with your lender before the gift happens, if possible, right? Before the check is written, before the money is deposited into your bank account. Because there are some ways to do it that make it a lot easier on our clients and the donor of the gift, whoever's giving the money. And it just creates a better client experience when we can lay out the path for you up front. You know the steps to take to make your life easier, right? We do this for a living. It doesn't make our life any more easier or difficult if the gift's already happened, right? But it can make it tough on our clients because we need to now unpack where the money came from.
Right.
And that's the biggest feeling of intrusion almost into your personal space is kind of the feedback that I get sometimes, like, gosh, they're asking me for an arm and a leg here to get a mortgage. It's like, well, because that money's deposited into your account and it's only been there a week and it was a really large amount, like, where did it come from? And let me take a step back too. The reason that we verify gift funds, the reason that we document assets for a down payment is on a whole, on the mortgage industry as a whole, we want to make sure that the money you're putting down was not borrowed money that creates an additional liability or a hardship for you to then make your mortgage payment.
Right. It's
that's
like
the spirit.
Undocumented private loan.
Yeah.
That we just want to make sure that that's not the case.
Yeah, exactly. And then you have this undisclosed liability that maybe makes it tough for you to make your mortgage payment. So when we get ahead of the curve, when we put the horse before the cart and we're having that conversation before the gift happens, the easiest way to do it is to really have the donor send the money directly to the title company at closing. And we'll talk a little bit more about that. There's some logistics there, and we need gift letters signed and things like that. So when you think about like some of your clients and you've had this gift conversation, what are some things that have come up as you've been discussing this?
Yeah, we had a client one time that did have a private loan from a family member to buy a house, and so that was interesting because they were upfront that it was not a gift, right? And so when those happen, we can't just like put the genie back in the bottle and say, "Oh, I didn't hear you." No.
True.
Like we do. It's like, okay, great. Do you have a signed agreement of like a repayment plan or anything like that? And they're like, "Well, we do have a really rough draft of that." I was like, "Okay, let's get it formalized." And they got it formalized, and we added it to their debt to income ratio, and it still worked. So it's not like those things can't happen.
Yeah.
So if a family member is like, "Hey, John and Sally, I want to help you this year. I'll give you $20,000 to get you going into your house. You can pay it back over the next 2 years," or something like that. We can make those work as long as that debt payment doesn't just get them to a disqualification ratio, right, for their loan. So that's fine. And there are great documents out there, template documents, even LegalZoom has them, where you can just get a private note, and a repayment plan, and you call it good, and you get it notarized and recorded.
Yeah.
So those things are available.
Yeah.
But most of the time we don't see that. We
really don't. Yeah.
We see just a gift, They're like, "Hey, let's just get you into a home," because I think a lot of people out there that have bought and sold homes in the past, maybe multiple times, they realize it's the fastest way to gain wealth in your life, and you live in it. So it's a win-win on both occasions where you're living in, you're your own landlord and you're paying your own mortgage, not somebody else's mortgage.
That's right.
And then when you sell it, all that equity that got built, all that appreciation of value, you cash that in and you make like 1, 2, sometimes 3 year salary in one transaction, You know what I mean? So that's
Yep.
pretty sweet.
And that's really what we're
So-
here to do, is help you build wealth through
Yeah.
real estate, whether it's your owner-occupied real estate, second homes, investment properties, commercial properties, et cetera. And so the best way to get started, right, that first home, that first transaction where you're an owner-occupant, so you're buying this house and you're going to live in it. It's going to be your your primary residence. Those are transactions that where gift funds are eligible, right?
Mhm.
Because the one thing about gift money, if you're going to get a gift for a down payment, is you can only use that to purchase a primary residence or a second home. Gift funds are not allowed on investment properties. So they're not allowed on properties that you're going to go rent or Airbnbs or whatever. Now, there are ways to structure the contract where maybe you have someone who's going to be involved with that investment and they're bringing the cash. As long as they're on the contract to purchase that home, it's not considered a gift. So there's some nuances
Right.
there. And again, we're going to navigate this with you. It's just, you can't unring the bell. You can't put the genie back in the bottle. And so when the check's already been written, mom or dad gave you that Christmas present. Here's $10,000, go buy a house. They've given you the check. You've deposited the check. Now it's in the bank. Now we gotta unpack that. We need a cleared check from the parents showing that it came from their account. Like there's some paperwork that again seems invasive. I've had many a conference call with parents that say, "Gosh, why am I showing my bank statement? I'm not the one on the loan. It's my kids." It's like, well, the money was deposited. We've got to connect the dots, the paper trail. That paper trail is a phrase we use. We've got to see where it came from. We've got to see it going in the bank, and then we got to see it after it's cleared, that's available funds, right? So these are the things that can cause some heartburn with a buyer who comes in well qualified. Hey, I've got credit, I've got a good job, I've got some cash, but I'm getting additional funds from another source, from a family member. And if all that happens before you have that call with your lender, it could cause a little heartburn, a little more effort and documentation on the part of our clients. And again, we are committed to our borrower experience, our client experience, our realtor experience, title companies, everybody's involved with these transactions to make these deals happen. Insurance companies, there's so many people involved. And so everyone's counting on the loan being ready the day of closing. Well, the day ahead or 2 days ahead of closing, ideally, right? You have some cushion in there. But the day of closing, our loan better be ready, right? And so there are so many different requirements and guidelines and conditions, as we say, to meet to get that $300,000, $400,000, $500,000 wire to the title company to get you to buy your house, right?
Now, I mean, what I hear you saying really is preparation. You know, so as you are talking with family and they're wanting to help you out there to get into your home, talking to your lender before that gift is given is really kind of what you're saying, because that could be the best timeline, the best framework of the gift, the right amount, really, so that it's not an over gift. So
let's involve the donor. Let's have a three-way conversation with your parents. If it's your parents giving the gift and our borrower, let's all just chat about the process. 5-minute phone call. Here's the best way to do it. Also, the least risky way to do it. We want the donor to give the funds to the funds are going specifically for the purchase of a home. Let's send them to the title company so that the title company has that money and they're holding that money versus giving the check to the homeowner. Something could happen. There could be some bank fraud, not wire fraud, but bank fraud. There could be some. What am I trying to say? Some theft, some identity theft, and those all of a sudden those funds get compromised between the time that the donor gave them to the buyer in their own bank account and the time it goes to closing. So just reduce that risk of where's that money going between the time that the donor gives it to the buyer and the time that we buy the house.
So what I hear you say is there's the cleanest, simplest path of least resistance is to connect with the lender about the gift before the gift is given. The person that's giving the gift, coordinate with them with the lender so that they actually give the gift to the title company.
That's what I would recommend.
Okay.
Yep, that's definitely what I would recommend. Again,
those of you that are out there, that's not the usual case. Usually, family member gives a check.
Yeah.
Check is cashed or deposited, and then we go from there. But that path of having the gift giver giving the money to the title company once you're under contract is a totally different scenario. Right.
Yeah, so let's talk about how the pre-approval works, right? So yesterday, I'll just give you an example. So I have a client. Their purchase price is about $250,000, and they need 3% down, so $7,500, or I guess they're doing 3.5% down, so about $8 or $9 grand, right? Mom or dad wants to give $10,000. This is the exact scenario from yesterday, and I coached him through that. Let's have mom or dad send to the title company. So his question, very valid question: do I need to have the money to get the pre-approval? Like, do I have to have the funds so that I can show the bank I have this, I have this money in my account? And that's why I think a lot of times the money moves hands to the borrower before you ever apply. Like, I don't want to apply for this mortgage if I don't have the money. I need to show that I have $10,000 in my bank account. That's not the case at all. The communication with the lender is, hey, we're getting a gift from my parents. Bob and Mary are given a gift, and here's the gift letter. It's coming from their Wells Fargo account. Awesome. And we have a standardized one-page form gift letter, super simple. It can be DocuSigned. We send it to the mom's email. She signs it. We send it to the borrower's email. He or she signs it, and we're good. And that document that we know the money is coming from the gift is good enough to get the loan pre-approved, under contract, through underwriting, and then clear to close. We send the title company the closing documents, and then mom wires the money to the title company, right? So it just cuts down on that 30-day window where the money is parked in the home buyer's bank account waiting for closing. Again, if it's already happened, it's okay. If the money's already in your account and it was a gift, we can document it. We can go backwards and sort of document that. It just might be a little more paperwork for you.
That definitely sounds like a smoother transaction.
Very. Yeah. That's what we're about.
That's good. I like that a lot. So it's Christmas time. People are giving all kinds of gifts. You open your card from, mom or dad says, hey, we want to give you money to help you buy a home. What's the next step?
What's the next step is, mom, dad, wait until I'm under contract.
Yes, don't write the check yet.
No, again, if it's already happened, that's fine.
But that's true though, right? I mean, that is the ideal scenario. Hey, I heard on this podcast, the lending podcast, JB said, which is one of my favorite things to say. JB said. That's wonderful. Thank you so much. Let's go house shopping. Don't give us the gift yet. We'll line it up. We'll just need a gift letter signed by you. And then once we're under contract, we'll get the gift to title.
Yeah. Now let's dial in on something that's real important.
Okay.
The technicality of the wire transfer from the parents, let's say, to the title company. So mom and dad signs the gift letter. They say they're banking at ABC Bank, wherever. The funds for the down payment better come from ABC Bank, right? So the title company is going to have a wire confirmation. I think they call it a participation certificate, a Fed reference number, right? The Fed wire number.
Right.
That Fed wire number, wire confirmation, is going to reference the origin bank account. That needs to match the gift letter. So don't tell us that you bank at ABC when you're really going to send the money from XYZ. So that's why the quick 5-minute conference call has to happen. Hey, here's the logistics of getting this money from mom and dad or whoever the donor is to the title company. And it's not you're not going to pull one over on us.
No.
That, we think it's coming from here and it's coming from that, because we're going to verify all that. It is the cleanest way to do it, though. And if it's coming from an investment account or brokerage account, money market, that's fine too. We just need to show where it's coming from. This is the account that it's coming from, and then we need to send it from that account.
Good.
To the title company.
So tell me, who is family? Is my uncle? Can my uncle give me gift funds, or is it just my mom and dad?
Yeah, the different guidelines, the different loan programs actually have some verbiage about close family, but it is blood relatives.
Yeah.
Yeah. So
like within one generation.
Yeah. Yeah. I have seen aunt, uncle, certainly a legal guardian, could be certainly grandparents, parents, yeah, for sure. Siblings, fiancés can be a gift, or even if a couple is divorced, it could be an ex.
Yeah.
That obviously they share kids together, right? But they're not married anymore. But the ex has given the ex-spouse a gift. So there's it does extend out beyond maybe just like mom, dad, brother, sister. But it can't just be like my good friend Bob.
Right.
In most cases.
Yes, that's important. Hey, it's my longtime pastor, church friend, or Even though they might be closer to you than family, that doesn't count as family on the guidelines.
And we're talking about traditional Fannie Mae, Freddie Mac, conventional loans, right? And then we're talking about FHA. You mentioned we have VA. There are a lot of banks though that they don't really care where the down payment comes from. I mean, there are some community banks that say, hey, we just need you to come with 20% down. We don't really care where it comes from. So that's why the conversation is important. So if we can document it, we want to put you in the best loan program, period. So documenting it, being able to document it is going to allow us to give you the best options where you can choose, okay, this is the best option for me. And then if we have to go to an alternative type program, we'll go to plan B or C. But we're not going to start at plan B or C if we can get a better loan in plan A,
And I love the part about just talking to your lender up front, because some people don't know there's the 3% or 3.5% kind of programs out there, or even down payment assistance programs. So those could be alternatives to needing gifts.
Yeah.
So if you're fine on the monthly budget to pay the loan, but you don't have the cash yet to close, still talk to your lender. Like don't let that dissuade you that you have to have a 5% or 10% gift. There might be other options out there.
Yeah. Well, I'm glad you said that, because thinking about this episode, in my mind, I wanted to chat about the difference between getting a gift for the down payment and doing a down payment assistance loan.
Yeah.
Because to your point, not everybody has access to a close family member who can help with the down payment. So because you don't have the down payment, that's not a reason. It's double negative. You should still have a conversation even if you don't have a down payment, because the down payment assistance programs, specifically 3% assistance, 4% assistance, like we have several programs where it doesn't matter if you have access to a gift from a family member or not. You can buy a house. You can get gift or grant money for down payment. You can get forgivable second liens is what they call them. So it's maybe a lien that sits on your house for 3 years. We'll give you the down payment, but you have to keep the home for 3 years, or else you have to pay it back. It's a great program. However, when you put them side by side, if you can get that gift from a family member, in most cases, the terms are going to be better, the interest rate's going to be lower, the costs are going to be lower when you have your own down payment, whether it's from your own bank account, 401k, or a gift from mom or dad, versus doing a down payment assistance loan. However, that does not mean the DPA loans, the down payment assistance loans, are bad. They're actually really, really good programs. We do them quite often.
Yeah. And we have to put an asterisk next to usually the scenarios, right? Because there are interesting things that come with the down payment systems that you can't get with other programs like the mortgage credit certificate.
Yeah.
And so though we do have episodes on that.
Yeah. There's some benefits.
So I like this episode. It is the gift season.
It's the giving season. That's right.
But any final thoughts for people out there as they're going into the holidays here?
Well, as we look at 2025, there is a sense of optimism in our industry for sure. At the same time, there are a lot of folks that we talk about this disconnect between the aspirational sales price. Hey, I want to look at homes here, but that comes with the payment that I'm really not comfortable with or can't afford. And so what we're seeing is a gap between affordability still and the sales price target for many of our clients. Now, how do we bridge that? And there's ways to do it through buy down programs, through seller paid closing costs. We can bring down the interest rates, bring down your monthly payments. So again, you're out there, you're thinking, I want to buy a house in 2025. I wanted to do it in 23. I thought I was going to do it in 24. I've been kicking the can, and now I've made the decision 2025 is my year to buy a house. Let's have that conversation about how to make sure your payment goals are met and also getting the home that meets your family's needs or your personal needs, bedroom count, garage, backyard, whatever those must-haves are. And that's really important, to share with your real estate agent of, I'm an aspirational buyer. I want to buy something in 2025. Here's what I have to have. I've got to have this. And we're seeing clients, contracts are coming in right now at a speed I haven't seen in a while.
It's been a big pickup,
yes,
for sure.
A big momentum shift. Here it is, December of 24 and heading into 25. So just know that there's down payment assistance out there. You can get a gift from a family member. There are 100% down programs as well if you're a qualified veteran or active duty military, right? You've got VA benefits. USDA is an awesome loan program. It's 100% financing. So there are lots of ways to get in a home without a down payment. Getting a gift from a relative is a pretty darn good way to do it, but it's not the only way out there.
Yeah. No, I think 2025 is going to be great. I think that we're going to have a lot of success stories in 2025 of people getting their dream homes.
Agreed.
Because I believe that a lot of move-up buyers out there, people that have their home but it's too small, and they want to get to a bigger property. Their kids are getting older. They need more space. They work from home now, and so they need their own office, or both, both spouses are working, and so you need two offices in your home.
Yeah.
That all is reality. So we feel you. We're here for you. We want you to ask us questions in the comments. That would be great. And we can put some content out there that might help you this year.
That's right. Happy holidays.
Happy holidays.
Happy New Year 2025. We're wishing you all the best,
And
health
Merry Christmas.
and prosperity. Merry Christmas as
Merry
well.
Christmas.
Take care.
Bye.